Well, joining me first up on the show from Bangalore's Member of Parliament Rajeev Chandrasekhar. Rajeev, great to have you on the show. The deal is off, the news is settled in, but there is a larger issue here. The fact is that the government might have backed the deal, but there are demands of far more regulatory reforms that are needed. And the feeling is that the government is not keeping pace with the expansion that India Inc. wants to do.
No, I think there have been acquisitions. I think, the Tatas have successfully pulled off many acquisitions. The Birlas have done some. There are many companies in India that have successfully concluded reasonably big-sized transactions. But it is true that when there are two countries with capital controls like South Africa and India, to try and get a structure that works and addresses both the countries' currency limitations and currency convertibility issues may become, and as the case has turned out this time around, may be a little bit more difficult than doing cross-border between India and the US and India and in Europe.
You have said in the past that Africa and Middle East are the logical areas for Indian companies looking at acquisitions, but given that they're not as evolved in terms of a regulatory framework as you mentioned, do you think it is even more imperative that we see quick reform as far as the government is concerned?
Yeah, I think we must understand that in India, policy making has always followed, in a sense, corporate activity. Really, policy making has never been ahead of corporate activity. So you may be making a case correctly that following this debacle, it may be time for the government to look at what the framework should be to facilitate more cross-border South-South kind of transactions, and there may be a case for that. But I'm not very surprised that the government policy was not in line with what it ought to be, because history has shown us in India that inevitably government always reacts rather than proactively remains ahead of the curve. So there may be a case, as you are saying, that following this debacle, that the government look at this whole convertibility issue comprehensively, not just from a point of view of facilitating M&As, but from the whole gamut of issues that are currently restricting our convertibility. From what I understand, the government is already sending out signals that they will look at this proactively and positively by addressing all of the issues. Unfortunately for Bharti MTN, that policy was not in place while this deal was being contemplated. And that's just an unfortunate consequence of how government policy making works.
Right. Let's shift track a little, Rajeev. You've seen various stages of Indian telecom, the internal consolidation, then the international players coming in, and of course another round of consolidation, and now expansion overseas. How do you see things evolving in this space?
No, I think the Indian telecom market, Vinny, is in a very interesting, transformational point, and I've been saying this for a few months and years. And in my opinion, the organic growth, the horsepower of the organic growth is in a sense sputtering out. Primarily because the market is now getting increasingly competitive. Consumers are obviously benefiting, but from an investor, operator point of view, the market is no longer a high growth market individually for each one of them. And so therefore, inorganic growth by acquisition and mergers is clearly a very important part of a strategy for a company like Bharti or any other company that has got scale and size in the telecom space. So I think what Bharti is attempting and what Reliance has attempted in the past, Reliance Communication, is a natural recognition or a natural progression of the market, which is that organic growth phase is more or less, the high organic growth phase is more or less over, and you will get now more of a Hindu rate of growth, very gradual, predictable rate of growth, and therefore any explosive growth that the companies need will have to be met by inorganic acquisitions overseas in markets like the Middle East and Africa. And so what Bharti is attempting with MTN and what Reliance did earlier with MTN is really a consequence of that.
But last question really, Rajeev, on the whole, has the mental framework changed for India Inc.? Have we truly become so big that we are looking at India-based MNCs? Has the mind shift happened?
No, I think Mini, if you had asked me this question 5-7 years ago, I would have said no. I think Indian companies are still very promoter-focused. Indian companies are still very control-focused, and that really doesn't lend itself well to operating in global markets and global environments. But I think over the last 5-7 years, companies like Bharti, other companies have made a shift to being more widely held in terms of shareholding, more professionally run with large amounts, substantial disclosure, and be really positioning themselves as companies of the global market. And so I would argue that, and I think this is probably, I'm not far from the truth, that there are companies in India today that are very well positioned, both from a management point of view, from a dispersed and distributed shareholding point of view, and from a capital-based point of view, and a credibility to access international capital markets point of view, to be able to play significant roles in the global economy and the global marketplace. And these attempts that have been made by Bharti and other companies are a natural sense of that confidence that they are ready to play the game with the big boys of the world.
Right. On that note, Rajeev, thanks so much for joining me on this show. Always great talking to you.